Okay, welcome to the Trader Tuesday. Today's the 14th of May, 2024, and special guest Charles Cottle. Charles, he and I worked together on some projects a couple of years ago. Charles, early exceptional trader, great teacher, amazing book that I'm showing here, Options, Trading the Hidden Reality. Lots and lots of experience on the floor. So it's a pleasure to have you here, Charles, to have you talk about your trading journey.
Cool. Yeah.
So, so how'd you get started way back when?
Oh boy, let's see. Well, I made my first trade as an accountant, 1979,
Oh
and
boy,
I was playing Schlumberger options. My
there's
first
a
trade.
name.
I'm still wearing the Rolex I bought from that trade.
Oh wow.
Yeah, it's funny. It's funny. But then, you know, let's see. So after a year of hating accounting and thinking I was going to be an accountant my whole life because my father and grandfather and brothers and cousin and uncle were all CPAs, Cottle and Cottle. And then was Cottle and Cottle Limited and would have become Cottle and Cottle, Cottle's Unlimited. It just
Cottle,
seemed.
Cottle cubed or something. Yeah.
But at junior year in college, I called my dad up and said, I don't want to be an accountant. And so he said, well, finish up, take the exam and all that stuff. And, try it for a while and see. And I gave it a year. And then then in that year, I met somebody down on the CBOE when it was on the seventh floor in the Chicago Board Options Exchange before they built the new building. And he invited me down to the floor and I just, wow. And then I met somebody who told me about a free seminar prior to webinars.
Right.
And, free classes of first options with Marty O'Connell. And I just fell in love with it. I came back and I gave my family a year's notice and I studied as much as I could. And I raised a few bucks and went straight down to the floor. I didn't want to be a clerk or anything. And I raised like 50 grand. And I went down there, leased a seat for like 6,000 a month. And promptly on schedule ran out of all the money in 6 months. And when I went back and I was telling my dad, he said, you should keep doing it. You should, I guess he was happy that I wasn't around the office anymore. And one of the reasons I wanted to, this is maybe a little bit too much information, but just all the screaming and yelling in the office, between my father, grandfather, brothers, I realized I don't want to work for anybody. I don't want anybody working for me. And that's what led me down to the floor. And so I got a job as a runner, just took a clerk's job. And I was
What
one of
year was that?
that was 1981 when I went down to the floor. And by the
Okay.
way, anybody who's emailing me still, and there's a lot of your guys, Charles at riskdoctor.com is overrun with rats, and I don't even look at that email anymore. So I'm using Charles Cottle 1981 at Gmail, just in case anybody wants
Well,
to.
now we know where the 81 comes from.
Yeah, that's right. So I that was a job at a company called Colin Hoxton, and what they were would every time in the old days it's before auto trading, which by the way I helped build some of that functionality, write the specification for it. If you sell a 50 delta option, if you're a market maker, a 10 lot, you got to buy 500 shares. So the way it was done back then, now it's auto traded. So when you buy something from anybody, they don't even know, the market maker doesn't even know he traded it with you. And it automatically buys the 500 shares automatically in his auto quoting functionality. But back then, you had to waive the order to somebody like me working for Colin Hoxton, who would waive the order with hand signals back to the booth where there were people on the phone calling up the New York Stock Exchange to buy the 500 shares against the 10 lot that a market maker sold. And if there was a 100 lot, then he's doing it for 10 market makers. Or I was competing, me and Colin Hoxton was competing with the Refco guys and all the other firms that had clerks as well, waiving orders. And then I'd run back to the booth and get the printout, a carbon copy, and give it to the trader so he knew that he actually bought it. We'd tell him, we'd give him a hand signal, looks like a karate chop coming from your middle of your nose, and you straight up and down hand, and you wave to him, you're filled. Because sometimes it would take a couple of minutes to find out if you got your 500 shares. Now, of course, it's instantaneously, and there's less slippage. You might have missed it, or you might have been working it between the middle. He might be trying to middle the market or trying to buy it on the bid. Anyway, it was a long, arduous process. But I didn't last long at that, because I decided that if I want to get back to market making, which I want to do, there were people that would back other traders. Now, how do you get to, most of the people go down there, it could take years before somebody gains the confidence. So I came up with this idea to print my resume on address labels, the really big ones, and then paste that to a trading card, which everybody had in their pockets. Because if you gave somebody an 8.5 by 11 piece of paper with your resume on it, they'd probably blow their nose into it and crumple it up and throw it on the floor, or they'd lose it. It doesn't fit in their pockets. But trading cards, people still have trading cards, that are 5 and 10 years old in their pockets. It's like a old attic. These trading jackets that we would wear, that every 2 weeks or every week or two, trade in on the first floor of the exchange and get a new jacket, a clean one. And some people had privately made jackets, custom tailored and all that stuff. But so within a day, I got a couple of interviews, and I had boned up on a lot of different things. And actually, Zoom Ahead, let's see, Zoom Ahead from 1981. I did that for about 6 months. Then before I did that resume thing, I'll get back to that. I decided that there was a guy who was really smart, who used to look for spreads for another market maker on a 50-50 split. And he was going to get on a seat soon. And I thought, he's got to replace himself. So I went to him and his market maker, and I'd say, I'd like to learn from you, take over your job. And the guy said, well, yeah, maybe we'll think about it. I go, look, I'll work for you for a month free. If you like me, keep me. If you don't, and if you like me, keep me and pay me $1,000 a month. If you don't, just drop me right there, then and there. So they liked me. I was making $1,000 a month, and I was learning from this guy who was going to start becoming a market maker. And he was like the smartest guy in the firm. He knew all the spreads. He knew how to work the Manchik-Weber, which was our theoretical what-ifalizer. And, back then you used reams and reams of paper to do your what ifs. I would print out thousands of pages on the clearing firm's computers and printers. And so like take IBM and run it up, every dollar from like $50 to $250 was probably trading at about $100, and every volatility. And I had stacks of paper, and I would do what ifs. What if I bought this bull spread, and what would it do? And I'd change my stack of paper, and I'd go and I'd look up, I would do it for like every week for the next 52 weeks and run all these different scenarios. This is before the computers would give you a nice graph like thinkorswim or any other platforms now. And I became very knowledgeable. And I used to look for butterflies for credits and cheap verticals. And once I was walking on the floor when stocks were duly listed like digital equipment, and I look up at the board, and in the book, which was the resting orders that were away from the market, there was a 20 lot to sell some calls on the Amex for 6.25, a 20 lot, and we're trading at 7 1/8 here in Chicago. Nobody saw it. So I ran back to the guy who I replaced, and he was already on a seat. He could trade. He had a badge. And I said, I found a digital equipment 20 lot. You go stand in the pit. I'm going to go get on the phone with New York. I'm going to try and buy it in New York for 6.25. And I'll give you the fill sign if I get it. And you sell the book, the 20 lot to the book, which was the resting orders that I just explained. And I bought him at 6.25. I gave him the fill. He said, sold, sell your book. And he sold the 20 lot, and we made over $2,100, and we split it. He gave me $1,000. And immediately when that happened, the whole crowd, there was about 5 or 6 guys. It was a pretty dead pit, not much going on. Turned to him and wanted to strangle him. What are you doing? We were saving that. We were going to split it amongst us. Bastard, give it to it. Nope, sorry, it's already filled and in the clearinghouse. So we got that trade. And it was just like little games like that. You would think. So then a friend of mine in 1983 invited me. So I did that for about 1.5 years, and I was earning, the 1,000 a month was a guaranteed draw against 50-50, and I was making a little bit more than that for this market maker who I took over, this clerk's job for. And by the way, Tom Sosnoff and started working for me as my sub clerk. And I got a job offer to be a market maker in the OEX because I was, kind of a whiz kid around there. And I was kind of like the guy who I replaced. His name was Dave Fork. I never knew what happened to him, but I said no because I still wanted to learn about boxes, reversals, and conversions, which was important to know. And if anybody is an insomniac and they want to learn about that, chapter 8 is a great way to fall asleep if you read my book. But that was real important to know back then. And so I turned down the job, but I didn't want it to go. So I said, Tom, this guy here, he's good. Why don't you, I'll get him and interview him tomorrow. So that night I gave Tom a crash course in butterflies and verticals and anything he can retain. And he got the job as a market maker. And it turns out he didn't need all the stuff that I taught him because it turned out to be a scalper's heaven. And if you can stand next to a broker that's got a 5/8 bid for something, you were right there and you could say, done, you could be trying to buy it at 5/8 or 9/16 or something and turn around and hit them and lock in your free teeny. 16th was the nickname for it back then. And so Tom got that job and went on to be a star, a scalper for years, and really monetarily and fiscally disciplined. He wouldn't live the life of a trader, buy fancy cars or anything until he had $1 million in the bank. That was his goal. Whereas a guy like me, who thought the world was coming to an end, I was living the high life, jetting around everywhere I could, whenever I could. Anyway, so I went down to the Board of Trade to see the new bond options. A friend of mine invited me to lunch who was all my friends back then became traders, either on the mercantile futures traders. Nobody was options. I was the only one of my friends group that went to options, but everybody else was either in the hog pit or soybeans or treasury futures or whatever. And I went down and they had just started the bond options in like November of 82. This is like February or March of 83. And I looked up at the boards to the bond options and I just saw money. And I knew I was going to make money. Knew it because of the spreads that I was doing on the Monchick Weber and butterflies and verticals and things like that, and back spreads and ratio spreads. I knew, wow, these are great prices. Oh man, I would do this. The way I would look at like a ratio spread is if I was analyzing a ratio spread, I would just go down 3 strike prices or 6 strike prices, whatever, depending on the market, and see what that ratio spread was selling for. And if it was not a loss to get into mine, and it turned into that one on a ratio spread, which is normally really dangerous. If you look at one that was way deeper in the money and it was still a credit or just a small debit, well, why wouldn't you do the further out of the money for a credit? So that's when I made my resume and cards. And within a day, because my guy didn't want to back me on the board of trade, he was afraid of futures from the stock world. And this is before index. This is even, right around when indexes were trading, but not index futures on the board of trade. It was just a cash index, the OEX. And so he didn't want to do it. So I made this resume, and within a day, I got a couple of interviews for the next day. And the first interview was one of the great market making groups. And go into his office, and he sets up a backgammon board, and he places the greens and the whites in certain positions. Then he turns the dice to like a 5 and a 2. I can't remember exactly. He says, "Okay, you're the greens. What would you do?" And I had played backgammon, but I wasn't like a real wizard. There were a lot of guys during lunch and during breaks, or when it was slow, they'd be up playing gin rummy for money or backgammon for money. And I wasn't one of those guys, but so I moved a couple of pieces. He goes, "Interview's done. See you. Thanks. Good luck." So obviously I picked the wrong move based on a risk reward that he sensed or knew or was good at. And that was it. But the next guy I got a job for, he just wrote me a check on the spot, $50,000. He says, "Go down, rent a seat, take all the tests and everything." So by April of 83, I started in the bond options, and I started making money right off the bat. And within a year, I hired Joe Corona, which some of you guys know, to be a trader for me. And we were kind of like a team with separate accounts. And then I hired another guy, and then I cut a huge deal with Hank Shatkin. And then it grew up to about 20 traders that I had over on the Merck and the Board of Trade. So I had about 10 guys at the Board of Trade, some guys in the soybeans, some guys in treasury notes, some guys in treasury bonds, bond options. I'm talking about the options, corn options. And what I would do is I would go and start trading in one of those pits, and have a clerk and show him the ropes, and then hand my deck over to him and say, "Okay, you take over." And when he was ready. And then the Deutschmarks were getting hot over at the CME. So I got a membership over there and went over there, and they give you a new members badge. It says new member in really big print on the badge, so that if anybody trades with you, they won't stuff you with 1,000 lot. They're supposed to lay off new members and not stuff them. So nobody knew what my background was. And I was just, I always go into a pit to get familiar with the pricing with something that maybe some of you are familiar with from my book or the first book, Options, Perception, and Deception, which was for market makers, called what I called the one-opt ARB. 3 letters, 3 letters, 3 letters, one-opt ARB. And that stands for the one option arbitrage, single option arbitrage. And what that would be was trading in and out of a ratioed straddle. So I'd pick and this is how I got to be the fastest in any pit that I ever went into, including, when I was on the Chicago Board Options Exchange, CBOE. But I perfected it more on the CBOT before I ran out of money, because I had some short teenies, and that's last day of that 6 months where General Motors was up like a couple dollars, and I had some teenies that were going to like 5/16 or something. And everybody who was trading, bailing me, taking my trades, and while I was liquidating, they were all calendar spreading, time spreading, which I didn't know anything much about. They were selling what I was buying back from them and just buying the back month and locking in a nice relationship. But I was out of money anyway, and I couldn't handle the $6,000 lease. The lease at the Board of Trade was $150 a month. So it was real easy for staying power, even if I wasn't making money right off day one. Anyway, so the one opt arb is you pick the most liquid options. Mostly I would do it with a delta of like 33. So if I buy a 10 lot, I'm going to do three options against it, or a 100 lot, I'm going to do 33. And I would be monitoring the price. I would write down the price of the option I wanted to trade with relationship to the futures price. And then I would just do by hand before we had trading, theoretical values, sheets. I would say, okay, if the futures move one tick, then the bond options, which were half the size of a tick, has to move. If it was the same size tick, it would have to move 33 cents, but it only had to move. It had to move 33 cents, which was two ticks in that market. Anyway, I would go up and down like 20 prices up, 20 prices down. I would pencil in the prices I had to try and buy at. And so it was like I would sit on the edge of the pit because everybody's in the when you're packed in with the brokers, you've got to be prepared to make two-sided markets on every option. But if you wanted to trade only one option, like the one opt arb, I had to have like where I could see everything. And it was like duck hunting. And as soon as somebody had that number that matched my two numbers where I could sell the futures against the call that I was buying or buy the futures against the put I was buying on that ratio, I would be ready. And so, bam, I'd buy them. And I was always doing buying first because I like to be long premium back in those days. When you're a beginner and you have limited funds, you don't really want to be on the short side of things until you're, fast enough and you have your ability to get out and you have developed the discipline to get out. But even if you have discipline, it's hard to get out when you're short premium because things can really get out of hand. And and you want to be ready for when they get out of hand. Like during 1986, I was in the bond options. As fast forward to when I was in the S&P options on the Merck, the futures options. I'm sort of jumping all around here, but I had my best day because I was making $2 wide markets when they were all normally like 10 cents or 20 cents wide on the S&P futures when the S&P was like 150, a little bit less than the 40 or 5,200 that it is today. Anyway, that's where you want to be prepared, and you want to, a market maker's position should be only like 5% or 10% of it at risk with a straddle left and right, but everything else buttoned up into butterflies, cheap verticals, cheap shots, long only, and reversals and conversions and boxes. That's what 95% of your position should be, so that if the shit starts hitting the fan, you can get out of the 5% that's at risk, whether it's a winner or a loser, and now you can be just free to trade anything when most of the people have their hands in their pockets and are just spectators in the front row seats of the markets going nuts. I was one of the only market makers making two-sided markets because I was free to do so because I didn't have an agenda that was dictated by your position. And when I had 20 traders, I would drive to the Merck. I would wait till the markets open. I didn't like trading the openings. I had huge positions, sometimes tens of thousands of options on in my accounts at the Board of Trade and the Merck, that only I would call up clerks to, sell 100 straddles or buy 100 straddles, whatever, to neutralize something or do my gamma scalping, whatever it was. But I would drive to whichever exchange the shit was hitting the fan and trade there. I had at one point I had seats on all three exchanges, the CBOE, the CME, and the CBOT. And so anyway, getting back to the one opt arb, I would get the fastest on one, and then I started trading two options. And then when skews were born, there weren't any skews in the market. And I can remember the day that it was born when the first out of the money call and the first out of the money put started to trade at a different vol. The put would trade higher. And so for a while, you're arbing it, the two against each other, against futures, getting in and out of them. And by the way, I told you how I get in. So I would mark down the price of where I got in, and then I'd make a new card with the numbers of where I wanted to get out. And then I would chart implied volatility on my on a card that had like graph paper on it, and I was point and figure charting implied volatility with tenths of 1% in the bond options, because one whole percent was like 10 ticks, and 1/10 of 1% based on Vega with the month that I was trading was 1 tick. Just an FYI. Anyway, everything was done by hand, no computers really. And so then I would, get out and, lock in. So if I was trading 100 lot and I made 1 tick, that's $1,500. I would make that in a morning or something and try and do that. And that's how I traded. And then you'd have your $10,000 days, and you'd occasionally have your $50,000 day. And then on my birthday, in 1986, I had my first $280,000 day because of the $2 wide markets that I was making.
That's a happy birthday.
Yeah, and I ate out trades. One of the things you did favors for brokers who were stuck with trades or made mistakes, and I ate about $30,000 in trades for these brokers who got messed up. And by doing those favors for the brokers, they remember you, and when there's 5 people bidding for something, they give it to you. And there was one 500 lot that came in that same day to sell me some puts that were way the fuck off the market. And I go, sold. And the guy says 500. I go, oh, I'll take 100. He could have stuffed me with all of them. And I turn around and I do the calls to lock in. And normally you do the futures right away, but my broker wasn't standing there, because this was the day that the SEP futures were turning into the DEES futures, and he had gone to the other side of the pit. And I didn't know any of the other brokers. They wouldn't take my order. They didn't know me. So I had to physically, and I wrote about this in the book, and physically run to a quarter of the way around this giant pit, climb the stairs, find my broker and say, sell me 100, because I had already done the 100 puts, the 100 calls. I wasn't doing this when Delta neutral. It was a rare situation. And while I was running, and some of you remember the story from the book, the futures were moving $1 at a time. And back then it was a lot to move $1 at a time. And it moved like $7 against me while I was running to the pit on 100 lot. And I go and I buy the 100, and I'm going, fuck, actually, that time was where I made the trade myself. I had the kind of badge I could trade futures or never found my broker. And one of the biggest trading companies' little brother was making markets. He was making $2 wide markets. And normally I would middle it. But once I middled it in the bond option, in bond futures at 100 to buy, I wanted to pay 11 when it was 10 bid at 12. And I'm holding up, my index fingers, 11 bid for 100. And the guy says at 12. And I just changed my index fingers to my middle fingers and walked out of the pit. 3 seconds later, I come running in, pay 13, because I missed them. And so this time, when the guy said 32, 34, I go, buy him. And he's laughing at me. He turns around to lay it off against SEP, and it was $9 against him. Anyway, I came back, licked my wounds, thinking I lost like $200,000 or something, or $70,000. And I actually made money even on that trade. That's how far out of whack. And that was part of the 280,000 I made that day. But it was brutal. But you got to be ready for it. You had to be ready, and you had to not have a position that was holding you, giving you an agenda. So you had to be able to neutralize first. So in my first week I'm back at the Merck now, and I'm in the Deutschmark pit, and somebody calls out and I'm monitoring the skews. I'm just penciling in where things are trading at. By that time, I had well, I was one of the first guys to hire a programmer and have a sheet of values with 5 different volatilities. This is before skews. So that the first implied volatility on the left side of my sheets, the calls would be the out of the money calls would be trading. And on the fifth column on the right side of the sheet, the puts, the out of the money puts were trading at those volatilities. And then everything between the out of the monies, closer to the at the monies, were trading like the middle of the page. And sometimes in volatile days, when volatility was jumping around, you had to throw out your sheets and have new ones printed up for you. But so I'm just marking up my sheets where things are trading. Just when I hear something trade against where the futures could trade, I'm just circling the numbers on my 5 volatilities. And I see a trade come in, and somebody comes in and yells, and I was still doing the one opt arb. I wasn't doing verticals. He asked for the, and I think I told the story in one of my books or both of them. I don't remember the strikes, 33, 34 call spread. And nobody responded. He goes, 33, 34 call spread. And nobody responded. So I saw that on my sheets, it was worth 24. And based on the skew, that was a great place to sell because it's normally trading like 22, 2 ticks under my sheets. So I gave a 2024 market. And the guy goes, and I didn't put a size on it. And I had a new members badge. And he goes, buy 100. He goes, or he goes, buy 200. I go, sold. And everybody turns around thinking the new trader got slammed, stuffed. And they go, hey, you don't have to take that. You're a new trader. You're a new member. And I go, no, it's okay. It's okay. And they're all talking, who's this new guy? What the fuck? They didn't know that I was an experienced trader from the Board of Trade. And then the guy goes, hey, 33, 34 call spread now. Because once you get 200 at one price, usually everybody backs off and they go 23, 25, right? Or, the next price, they'd go 21, 25 or 22, 20, whatever. It was a 4 ticks wide market. They would widen it, go step it up, not sell more at the same price. I go, I'm still 20, 24 because I've been monitoring the skew for a week, And he goes, buy another 200. I go, sold. And everybody's going, fuck. And each 200 lot had a 12 delta. I turn it by 24 futures twice. And then the guy goes, got any more? I'm feeling lucky. I'll buy them for my own account. I said, I'll sell you 100. So I bought 12 more futures for it. I had 500 of these things on now, and everybody's like, it's big news on the floor. And then the guy who's the biggest guy in the pit who would have made this trade, he comes back from the cigarette corner of the exchange on the floor. That was the only place you could smoke a cigarette. And everybody's telling him about the new guy. Never looks at me. He's looking at his sheets. He's looking at the Swiss because there's a correlation. He's part of a big group of traders and they all share the book. And one of the first companies to do that, CRT, it was called, Chicago Research Trading. And he calls out the same market. He goes, 33, 34 call spread. I go, 22, 26. He goes, sell you 500 at 22. And I just sold him for 24. And the futures hadn't changed much. So those were a scratch. And he goes, I'll just take your futures cards. I handed him my cards. They changed the name on it. They were his now. And I made a 2-tick profit. Those are $12.50 each. 1,000 of them. I made $12,500 in like 5 minutes. And I called Joe Corona, who was my general over at the Board of Trade, who was taking care of all the traders over there for us. And I said, I won't need, because we had talked about, I'm going over the Merc, it's new markets. I'm going to have to get subsidized by you guys trading for a while. And we never worked anything out. I said, but we don't need to do that. This is a good market over here. So forget about any sharing of your profits with me. This is going to be good over here. And so then I developed traders in the Swiss, the British pound, the live cattle, S&P 500, and then the Eurodollar options. And by then I had already worked out backing because there was a trader whose clearing firm didn't understand the risk, and they were making him get out of a double box, which is a double butterfly, which is buying the call butterfly, selling the put butterfly, or vice versa. If you do that, you're long one box and short the other box. They were both worth the same thing. There was no early exercise in play or anything. It's just that he didn't have the margin to carry it. And my clearing firm wouldn't do it. So I went and cut a deal with Hank Shack, and he gave me his banker, the president at the time, a guy named Wally Weisenborn, and I showed them how there's zero risk in this trade. And they said, we'll back you. And I brought all my 20 traders over to them and cut a great deal where I got 70% of my own account and like 20% of all the other traders. And that's where I built it into I only had 3 traders when I went to them, and I built it to 20 under that arrangement. And that's when I moved over to the Merck. So that's a long way of how I got started.
Wow. Um, no, you were involved in the creation of thinkorswim, weren't you?
Yeah, it was my original business plan. And I was living in England at the time, scalping, or not scalping, but trading penny stocks during the dot-com boom. And I had like $10,000 in my IRA at that point because I had gone through the crash of '87 and done some other, International Trading Institute. And I had like 10,000 in my IRA, and I turned it into like $280,000, like in less than a year, just buying penny stocks during the boom. And I wished I could trade options. And I came to the conclusion that you can't do spreads. You can't sell, you can't leg anything, because if you buy a call, the volatility is on the moon. You don't want to buy that premium, and you can't sell first for margin requirements. And so I'd already taught electronic trading in Germany and Sweden and Spain and Austria, and there's another couple of countries in there, but for International Trading Institute, and living out of a suitcase for a couple of years, which was really one of the best times of my life. 6 months in Vienna, 6 months in Madrid, it was unbelievable, training all the bankers on electronic trading systems. And I always dreamed that eventually you'd be able to trade spreads. And so I drew up this little 6-page business plan. And Tom, who I'd been in several businesses with, startups that we tried and failed, restaurants, gold mine in Africa. I was 6 months in Mali at the time when I came up with this idea, when I was living in what was called the old cow stall. It was a converted cow barn from the 1700s in a beautiful part of Somerset, England. And came up with the idea of offering spreads on a trading platform, an electronic trading platform. And I was showing it. I sent emails to Schwab and Ameritrade. And I got an interview. The CEO of E-Trade, can't remember his name now, was a famous guy. He said, we have a subsidiary, E-Trade UK. The CEO would like to have lunch with you in London. So it was 111 miles from my house. And every time we drove to to London, we would pass Stonehenge on the left. That was before they had ropes up, and you could just wander in and touch the stones and everything. And I went and had lunch with him. He thought all my ideas were too American. He was going to refer me back to the CEO in the States. And I sent this proposal to Tom just to proofread, because he always, his command of the English language was better than mine, and what business people would want to hear. And, the only reason my book was even readable is because my wife from Britain is a great with languages and the English language and grammar. And she was my editor. And every time I gave her a page, it would come back all marked up. By the time I wrote my 3rd book, I knew how to speak English or write in English. But it was a long process. But Tom proofread this, and he goes, "We could do this." So I offered to put up part of that money of the 280,000 that I had amassed. And Tom said, nah, because he had always put up the money for the gold mine, for the restaurants, for the mattress company. And so we'd always done deals on a handshake. I stopped trying to reach out to everybody else, and we raised a few bucks, or Tom did, and raised some money off the value of my book. You know, I seemed like a guy who knew what he's talking about, so it was pretty easy to raise the money that we raised. And uh, there's some cool stories in there. I don't know if I'm at liberty to say, but I'll just keep my mouth shut about how that all went. There was some genius moves by Tom, incredible businessman, obviously. And see, so I started evaluating all the builds and trying to break the system with each version while we were developing it from 1999 to through 2000. And around 2000, towards the end of 2000, right before we opened our doors in December, I think we were up and going. Or I might be off a year. It was by 2001 we were ready to open our doors, I think. And I decided to move back to Chicago. But halfway through the builds, I go, when are you building the spreads? And Tom writes me an email. By the way, when we started this process, Tom didn't even know how to use email.
Oh, wow.
I will tell you this story, but he knew how to respond to an old email. So anytime he had to initiate a new email, he would find an old email and start writing in a response, a reply to that email. So I'm writing him in one of these, emails. By then he knew how to do it. We had emails at thinkorswim.com, and even before we opened our doors. And so where's the spread? So he says to me, he's joking. He goes, though I'm inclined to agree with you that we need spreading, the CBOE tomorrow, is making this up, is having their 1 year anniversary of the last time a spread order came down to the floor. So it's not practical. Tom was real practical. So my idea is that I'm going to be rolling out in some new software that's coming out. Tom knows about it. Tom Nudemaker knows about it. And I'll be sharing that with you when we're going to look for some beta testers for this new revolutionary kind of thing. But that's all I'll say about it now.
Yeah, we look forward to when you're ready to release that.
Yeah, it'll be patent pending in sometime this month. So that'll be a safer time to share it, but I'm still probably going to require an NDA. So for those of you who will like our pitch that we put together without going into too much detail and willing to sign an NDA, we'll get you enrolled and we'll conduct some webinars and we'll go back and forth and people can share their experiences and it'll be really cool. I'm looking forward to it. But so rewinding back to what I was talking about, I said in response, I said, Tom, if you don't build spreads, I'm gone. I'm leaving. I'm done. I'm going to go back and write to E-Trade and pick up where I left off because that is the only reason that I'm on board. And because he didn't want to lose me, he goes, okay, we'll do it. And it became 99% of our business.
Sure.
And by the way, the first version, I mean, Thinkorswim today still looks my original mock-up that I said, this is the way I want it to look.
Well, and then most of our accounts just got moved over to Schwab, and they're having problems with the platform, with the monitor or analyze.
Are they? I still have all my accounts over there, and most of my accounts over there, and I've been traveling, so I haven't pulled up the desktop yet. But I did pull up the version. It's got all my money right. I didn't look at the account statement. I just wanted to make sure that all my trades were in, that I, and that my positions were all right. So I'm up in Sedona for a few days and I'm going to go down to Scottsdale and I'll see what you're talking about with problems of the Schwab takeover of that.
Well, this analyze P&L has been wrong for a couple of months. So maybe you could talk to people in the right place and kind of energize them to fix that because it's driving people crazy.
Well, I had an in over there, but they must have left. So I don't really have much pull over there anymore. And the one guy, JJ, who I talked to, he went over to Tasty Trade.
Mm.
So he's no longer part of that. But I've told him about all the problems with that platform. If you change the spread type from single to butterfly and you get the bid and ask, what a waste of real estate. And even the marks column is a waste of real estate. Some of the butterflies are negative. They're not definitely don't go in a price arc. So there's a lot of problems with that, but I guess they don't fucking care, you know. So I don't know if anybody's going to be satisfied with what they want to do. I've pointed out these things for years, even when I knew the people over there, and it's not high on their agenda.
Apparently not.
They'll go the way of
So
the dodo bird.
yeah, well, people are looking at other alternatives, so we'll see
Yeah.
how it plays out.
Yeah.
So we can wrap this up pretty soon. So if you had some beginner traders coming and asking for advice, what would you tell them for like option trading?
Trade way fucking too small. How's that? Too
That's good. That's
fucking small. Trade really, 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 really small. Why? Because you're going to take some beatings and you need staying power. And you don't know enough about the landscape and all the different ways you can screw yourself, even when you're doing everything right. Seasoned guy like me, when I tried a new platform on E-Trade's options trading platform, I had a worthless butterfly. I was just going to salvage the remaining 25 cents on once. I entered it as negative 25 cents by accident. I actually paid to get out with a debit of 25 cents. So you got to get a lot of stuff under your belt. And they didn't even reverse that. When we opened our doors to thinkorswim and I was on the desk, um, somebody made a mistake like that, we'd get them out of the trade and reimburse them. But they don't do that anymore. They don't have to. That was one of the problems with when we came to loggerheads with Tom when I finally left in 2003 and just walked the plank and said, I'll take my chances. You'll be hearing from my lawyers someday. That's when they finally put my contract in writing and it wasn't what we agreed on. So, um, but yeah, so that would be my first advice, trade small. And, they call a butterfly a level 3 trade, but it's really should be level less than 1. It's the least amount of risk, especially if you're buying only. That and verticals, just learn everything, but then dial it back to verticals, butterflies, ratioed verticals, which are unbalanced butterflies or broken wing butterflies, whatever you want to call it. And that's the safest way to coexist with almost any way that you want to play the market, always with limited risk. Don't think you're going to get away with it because they got your number and it's only a matter of time. Do you remember the days of super trader Karen, Tom?
Oh yeah, yeah. With the O'Hare trade.
Exactly. Okay. Does everybody know what an O'Hare trade is?
I don't think so. I mean, I grew up in Chicago and I've heard you tell this, but go ahead. It's great.
So it's in any market. It's not just options, but you put on a trade and then you go to the airport. And if you call up and if it's winning, you close it over the phone and then you come back to work the next day. But if it's a loser, you get on a plane to Buenos Aires or wherever. You leave the country for good. So, but how do we
But
get
yeah,
out?
yeah, Karen the super trader. I
Oh,
don't know what
Sarah,
happened to her.
Karen Super Trader. So if any of you remember, it was Tom's honeypot because she would trade huge on thinkorswim's platform and sell out of the money strangles, and she had her methodology. And in a response to that, and I don't know if Tom ever watched it, but when she was still in business, and it's probably still up there on the internet somewhere, that's my response to super trader Karen. I said it's only a matter of time. She's a walking time bomb. And eventually she did blew out. But I had a real interesting analysis. So she sells a strangle, right? That's selling a put, selling a call. So I constructed a way she could sell those same calls and puts for the same analytical reasons with all the rocket science that back that up. Why that strike? Why that price? Why that size? Blah, blah, blah. Okay, I'm going to honor it. I'm not going to question it, but I'm going to show you what you need to buy against it now in that construction. And so because of the skews, simply on the call side, you could sell that call and buy a further out call and reap the same, reap about 80% of the credit, 80%, and have limited risk, right? So instead of selling 100 to get the X amount of premium, you sell 80 vertical, you sell 100 and instead of selling 80 verticals, you sell 100. Instead of selling 80 naked, you sell 100 verticals to reap the same exact to the penny credit, right? Pretty simple, not rocket science. Everybody, I think, can understand that, right? Makes sense?
Sure.
Nobody's
Yep.
going to be stupid enough to sell something naked when you can get 80% of it, the numbers what I just explained. Now on the put side, because of the ratio, because of the skews, you couldn't do that. You wouldn't, because the way out of the money puts are so high, the verticals that you'd sell are too cheap to generate that credit. But on a broken wing butterfly, let's see, it was a broken wing butterfly. That would be the short strike. You'd buy a lesser quantity in a closer strike, and I named the strikes. And I smoothed out all the butterflies so you could see the values of everything, because all of those butterfly prices are distorted because of what we're given with these platforms. So there was a lot of analysis. It was a really big project for me to make this video in response. And then you buy the further out strike. So you're buttoned up. It's limited risk, limited gain, and generate the same credit on each side. And so if she was right, she would continue to make those outstanding returns. And I said, and even in the video, if you see her, go ahead and tell her the warning that she's only a matter of time. And it was only a few months later that she blew out. And she lost so much money. Oh, it's horrendous what it finally turned into lawsuits, and it was bad. But she
Yeah, I
was
remember.
queen of the mountain back
I
then.
think the SEC went after her too, didn't they?
Yeah, probably. I don't know. But I don't say give her fair warning because I didn't contact her direct, but I gave a warning out there that anybody who knew her could have contacted her and showed her this video and she would have learned her lesson. And
Oh, Mark
right.
Fenton said, yeah, the SEC shut her down. It makes sense.
Hmm.
All right, Charles. Well, we usually go half an hour, but we're almost at an hour, but it's been a lot of fun. So
Sorry
thank you
about
so
that,
much.
Chief.
No, no, that's great. It's always good when you go over for a good reason. So I'm looking forward to when you're ready with your new project and unveil, take the cover or the curtains away and we can see what's going on. And I'm sure if you have people that want to test it with you, I'm sure you're going to find a lot of them here that want to try it.
Beautiful. Looking forward to it. Looking forward to it. It's going to blow a lot of people away. Going to blow the world away if this thing works. But I've always been a dreamer, so it might just remain a dream. But maybe you guys can help me take it from a dream to some sense of reality.
Well, I did my share of beta testing. I was a Windows 95 beta tester, believe it or not. So I like the bleeding edge. So,
Okay. I'll
all
just
right, my
give
friend,
everyone one little hint. It's for Bitcoin.
initially, but you have plans to expand that to regular markets, right?
5 years, 10 years, it might beat everything. Going through the SEC might take years, but we got some plans to do a game version with trading contests first. And, we'll take it from there. Then we'll go the wild, wild west and be on some offshore exchanges while we'll be building it totally compliant with SEC. But because of all the red tape and the hoops you got to jump through, we're going to march along at start deriving revenue long before we get compliant. I read,
Sounds great.
as you know, when we built spreading for thinkorswim, the world wasn't ready for us yet, and all the other browser-based weren't ready for spreading either. And by the time they finally approved spreading, we turned it on the next day with thinkorswim, and we were off to the races.
All
Built
right,
this week.
Charles.
Okay,
Be
take it
well,
easy.
and we'll talk soon, I'm sure.
All right, take care.
Thanks, everyone.
All right, adios.